Hey everybody, welcome to Mortgage Today for Thursday, November 2nd, 2023, and oh, what a day it was. UMBS were up 39 basis points bright and early this morning, the first hour of trading. S&P futures were also up 39.25 points after that first hour. Bonds were stronger in the overnight session, with most of the gains arriving right at the start. Domestic traders began buying right at 8:10 a.m. Gains briefly extended after the claims data, but not by much. Sovereign yields are down across the board, with big declines in gilts after the Bank of England maintained current rate levels. We also are seeing double-digit drop in bond yields. We got jobless claims, which came in at 217,000 on a 210 forecast. Continuing claims came in at 1.818 versus 1.8 forecast. It was 1.783 previously. So a little bit of weakness in the job market. Labor costs came in at negative 0.8 on a 0.7 estimate. It was 4.3 previously. Investors are piecing together commentary from yesterday as the Fed left rates unchanged, and Powell did not rule out the possibility of a rate hike at the next meeting, noting that the cuts are still not being discussed at this time. Powell reiterated that the process of getting inflation sustainably down to 2% has a long ways to go. The job market seems to be showing signs of weakening based on the latest round of jobs data this week. Non-farm payrolls will be released tomorrow, and as investors continue to assess current economic condition. The Fed Fund futures now predict only a 15% chance of another 25 basis point rate hike, a sizable difference from a month ago when it was closer to 40%. In a rally also fueled by oversold conditions and positioning, the S&P 500 added almost 2%, its best session since April, and the market's fear gauge, the VIX, fell below 16 and breached a key technical level. Long-term treasuries outperformed, with 30-year yields down 13 basis points to 4.8. The dollar dropped, the pound gained as the Bank of England pushed back on the talk of rate cuts. Oil topped $82 a barrel. In the run-up to the jobs data, the report showed U.S. labor productivity advanced by the most in 3 years, helping to alleviate inflationary impact on recent wage growth. Continuing jobless claims rose for the sixth straight week, indicating those losing their jobs are starting to have more trouble finding new ones. Economists are forecasting non-farm payrolls to rise by 180,000 in October, following September's gain of 336,000. U.S. UMBS closed the day down 44 basis points at 100.34. The 10-year actually dropped down to 4.63 at one point, which is nice, but closing at 100.34, that puts us right here, right above that 50-day moving average. That brings us back above the 15-day moving average. So we're getting back into the technicals of the chart after being well below all of them for quite a while. We also got news that Freddie Mac reported $2.7 billion in profit, a 104% year-over-year increase in net income in the third quarter. Wow, when everybody else is struggling, they're making that much money. That boost in earnings came at the same time as the 30% decline in new business activity attributed to Freddie's credit loss reserve activity. In the third quarter of 2022, Freddie booked a $1.78 billion provision for credit losses versus a $263 million benefit for the 3 months ending September 30th. Wow, that's a lot of money. They keep talking about how they can serve the underserved. Well, maybe giving some of that money back and helping out more meaningfully would definitely help. We also got news that from Housing Wire that Bob Goldberg is out as the National Association of Realtors CEO. He is leaving the trade association just 2 days after they got walloped in court. We also got a new post from our sponsor at wellthatmakesense.com. Definitely check this out. The Slight Edge is one of the most impressive, one of the most universally heralded books you will ever find. It is a great recipe for going from where you are now to success that you want. Definitely check it out. This is part of our video series, so it isn't actually reading it. You can just watch the video on our website at wellthatmakesense.com.